common question and main concern of most business owners thinking about selling their company is if they will have to owner finance the sale. Fortunately, there are some good answers for business owners in this question. The SBA, the Small Business Administration, is still a key lender in small business acquisition. The SBA does not at this point in time have an established rule requiring owner financing, but most banks that do SBA loans are following a guideline of a 10 to 15% owner note as part of the transaction. Fortunately, this allows the seller to get 85 to even up to 90% of the sale price of the business at closing. Of course, the transaction has to meet all of the guidelines of not only the SBA, but the bank to be able to get a loan. But for those businesses that meet the requirements, the seller can get the vast majority of the cash at closing. In larger transactions, and let's say the multi-million-dollar range, there are other elements of owner financing present in most of those size transactions. For example, earn-out note structures in which the business has to perform in future years after the sale to a pre-established benchmark will be a part of most of those size transactions. But those earn-outs have to be fair both to the seller and to the buyer and are really bridge financing devices, with the seller still getting a large amount of cash percentage price at closing. So there is good news in balancing a healthy part of the cash of the sale price at closing with a smaller element of owner financing for most business owners.